I like to keep my SPY and QQQ trading strategies simple. And one of the indicators that I like to use is demand index. And I want to show you a practice session I had. It's actually with the QQQ, and I was actually trading the stock. I was buying and shorting as part of the process. And I generally use options. I like to trade options when I am doing my day-to-day trades. Generally, I depend on my overnight trades with SPY tomorrow, but sometimes if things go wrong, I'll day trade my way out of it if I can. Now let's look at this session and let me know what you think on the other side. So I'm watching these moving averages, which are the 34 and 5 moving averages, and I'm seeing them about ready to cross. It looks like they will. And I'm also using demand index. It's a kind of like a money flow, supply and demand. I like these types of signals that I can use along with a good moving average to give me a sense of when it's a good time to get in or just stay out, because sometimes you can get faked out. And it looks like I might have gotten faked out here if I would have bought just based on the direction and the trend of the upper line, the 5. So I'm watching this. I have these areas of resistance that I'm kind of watching. This one maybe could be a little bit higher, but I'm keeping an eye on them, and we'll kind of watch these together. I will speed up so you don't have to watch painfully through this, and I'll let you know what the next move will be, if I'm going to buy or if I'm going to sell. What am I going to do here? The demand index, DI, study is an oscillator based on price change rate, volume, and volatility. It's often used as a leading indicator for trend analysis. Its calculation is based on the ratio of buying pressure to selling pressure, assumed positive if the first value exceeds the second one, and the negative otherwise. So it looks like the moving averages are about to cross, but the demand index has not yet. So I'm not going to allow this to fake me out. Now I am buying and selling shares of QQQ here. Generally, I would, okay, they have crossed, but we have not gotten the demand index underneath. Oh, now it's just about to go. So I am going to sell. So I did go in, and I'm going to put a stop about right here. It may not be necessary. I'm going to put it a little higher here. Probably not a wise move. But let's see where it goes. All right, it's going down. I want to protect. I am protecting my position. Maybe I will move my stop down a little bit more. I want to protect my position. As we see, we've crossed over the demand index. It goes down some more. The question is how much room do I want to give this? And that's really, I'm in the profit. Okay, we've gone down. Let's save a little more profit. And some more. All right. So this is how the demand index works. All right, I'm out of the trade. But this is just an example of how the demand index works. And I like to use this to help me prevent getting faked out, although you can get faked out with the demand index too. But it's a good combination, something that you can use to keep it simple. Money flow is another good one, but This is one of my favorite ones and tends to be a go-to for me. Maybe there's one you like better. I could try that one out. Let me know. It looks like it's still going down. I like to use indicators with buying and selling pressure. That's why we like the SPY tomorrow indicator. There are a number of ways in which you can use different signals based on your trading style. Money flow is a great way to go. The moving averages, the one I was using here was a 534, but there are many other moving average combinations that work pretty well. So I would recommend that you test the ones that you feel are more comfortable for your trading style. And of course, let me know what you use as an indicator in the comments below.